Alrighty guys, what is going up? Welcome back to another episode. In today's video, we're going to be talking about the stock market. Is it going to crash in 2021? It seems like almost every day we have articles or the media stating that the stock market's doomed. Get ready for another nasty crash. So we're going to be pretty much debunking these and pretty much how you guys could prepare if this does happen. So I hope you guys enjoy it. If you get anything in value, hit that like button and subscribe. If you guys have any questions or concerns, go ahead and ask them down in the comments. And if you guys want to learn more about investing in the stock market, go ahead and check out my course. It'll be the first link down below. And hey guys, I think we may be doing some merch for the 10,000 sub special. So stay tuned. That will be coming within the next week or so. So now guys, let's jump into it. Roll that intro. Let's go. Bam. So now in 2020, we had so much volatility in the markets. We had ups and downs, consolidation, everything. In March, we had a fall of 46%, which is literally crazy because the stock market finished out the year up 15%. It had the fastest recovery that's ever happened through a recession. And a lot of people are worried, stating that this volatility is going to come into the next year. I do think there's some things you guys need to understand, but obviously, I don't think this is something you guys should lose sleep over. The very first thing you guys need to understand is, yes, with the volatility, unemployment rate right now is very high. It's around 6.7%. And the reason why this is high is because a year ago, it was hovering around 3 to 4%. So understand that it pretty much doubled in a single year, which the reason why this is important is because a lot of economists think that this is a good gauge to judge the overall economy. Now, the reason why this is because if people aren't working, people aren't spending. If people aren't spending, overall the economy is slowing down because the corporations in it aren't making money to pay their salaries of people. So it's kind of like this little domino effect. But I do think things are getting better because in March, the unemployment rate was around 15%. So it is slowly going back down to those levels, which is very, very good news. Now, the second thing you guys need to understand is inflation. Inflation right now is very, very high. All money out there, 20% was printed last year. 20%, which is very, very high. But I do think this is nothing to be too worried about. I do think that this could have a little factor within the next, 2 to 3 years. The reason why I kind of push that out is because I think that in 2021, people aren't going to be spending as much money. So we're not going to get a good gauge as the overall inflation. It's probably going to be a little more of a long-term thing we're going to have to worry about. But now, what is some good news and how can I prepare? Well, the good news is through all the recessions, the Great Depression, the 2008 crash, the dot-com bubble, the stock market has had an annual return rate of 9.8%. So if you guys just pretty much stay the long course, understand that you don't care about this day-to-day volatility, you guys will be just fine. I completely promise. Now, how can I prepare for a stock market crash? Well, the very first thing I would do is hold a little bit of cash. So if let's say you guys are holding 1% of cash, maybe amp it up to 5%. So you guys are ready for a fall, because with a fall, it brings so much opportunity to buy stocks that are undervalued. Imagine if every single year there was a huge for sale signs on Ferraris. When would you buy a Ferrari? When they're on sale. That's the same thing with the stock market. When things fall undervalued, buy them. Don't get scared and sell. It doesn't make sense. The reason why is because why would you sell when things are low? You should sell when things are high. Buy low, sell high. Common sense, guys. Common sense. Don't let emotions play a factor with your investing. Now, the second thing I personally would do is pretty much be diversified. Be in multiple different sectors because some sectors get hit worse than others. Look in 2020. Now, a lot of things got absolutely hammered, but if you guys were heavily invested in tech, look what happened. You guys would have finished out the year like up 30, 40, 50% in value. So be diversified, be in multiple different sectors. You guys will not regret it. Now, the third and final thing that I personally do is hold bonds. And I know a lot of people right now are stating, Carter, you can't make any money with bonds. That is not the case, guys. That is not the case. Bonds historically have moved around 5% in value per year. So it's not as good as the overall stock market, but it has very, very low risk. Not to mention, I get cash flow from this. I get dividends of around 3%, so I don't have to worry about it. I can almost sit back, relax, and let those dividends come in. And here's the beauty, is if stuff falls undervalued, sell those bonds, buy the thing that's undervalued, whether it's a stock, ETF, or even Bitcoin nowadays, because it will have a higher return on investment, also known as ROI. Now, me personally, at the end of the day, be diversified, understand that this is a long-term investment, and you guys will be just fine. You guys will be. Use the opportunity if the market does crash as an opportunity to dump. money. The most millionaires come out of a recession. So I hope you guys enjoyed the episode, and if you did, hit the like button and subscribe. Don't forget to check out my course. You guys can use promo code DIVIDENDS to get 50% off, so at least check it out. It will be the first link down below. And if you guys want to sign up with M1 Finance, you guys can now get $30. So that'll be another link down below, so at least check it out. So take care, everyone. Remember to stay happy, stay positive, and stay safe out there.